Good morning and welcome to the Legacy Lounge.
It's great to be here, Deborah.
Thank you for coming. This morning we feature Gretchen Dinucci, Vice President and Chief Underwriter for Penn Mutual Life Insurance Company, and the emphasis on the word mutual, where it's owned by the policyholders, right?
Yes.
And
so.
Dividends are paid to policyholders and different from a traditional insurance company where it's really the corporate shareholders that receive the profits.
Yes.
And you've always been a mutual. And
Yes.
a lot of companies have shifted through the years, but you've maintained that. Can you tell me why and how that contributes to your financial stability?
Sure, Deborah. First, thank you so much for having me. And Penn Mutual was actually founded in 1847 as a mutual company, and we continue to be a mutual company. And our focus really on being a mutual is financial stability, long-term viability. Our policyholders share in the success of our company. And, we are different from a stock company, like you said, where shareholders really are the controlling pieces there. So we're just bullish on being mutual. We feel it's our superpower, if you hear our president and CEO explain that. And we have long-term aspirations. We want to be there year after year, generation after generation for the policyholders. And one thing too, Deb, that's very interesting is Penn Mutual has earned the A+ rating from AM Best for the past 98 years, and I think that's one of the highest in the nation. So we're very, very proud of that.
We'll talk about ratings across the board in a bit, but I just want to say that, 1847 to present, that's a pretty good track record. And my understanding is that dividends were paid to policyholders even through the Great Depression, recession, inflation. You've had just a constant record of success there.
We certainly have. Dividends aren't guaranteed, but we have paid them throughout our entire history.
It's really impressive.
Yes.
Yep. When we think about the dividends being paid and the financial success, one has to ask the question, how do you, as a chief underwriter, evaluate someone's insurability?
Sure. So what is interesting about what I do, we very much coordinate with the product development area, the actuaries, and the underwriting and distribution, and our products really are the core of who we are. And so it's really the underwriter's job to, as people apply for insurance, to appropriately assess the risk to the product pricing. So how do we do that? We have a group of talented underwriters who've been trained over time to select risks. We're in the business to take risks, right? We want to help the financial professional with their business plans, whether it's estate planning, business opportunities, family planning, all kinds of purposes. So we're looking at the insurability from many perspectives. We're looking at health information. We're looking at non-medical information, perhaps their financial information that we need to look at there. If it's a business, we're looking at the type of business, the business financials. We're looking at non-medical things as well, like a driving record. Are they skydiving? Are they cave diving? Things of that nature. So it's really very all-inclusive, and we are well-trained to recognize, a very favorable risk. We want to make things fair and equitable as far as premium payment. So, you can have a young, healthy individual. That's great. They're going to have lower premiums versus maybe somebody that's had some medical troubles, diabetes, heart attack. They might have to pay a little bit more. So it's really up to us as underwriters to evaluate that risk and, just put the pieces of the puzzle together and make a very consistent and competitive offer.
That is helpful. I think a lot of people out there think that you're either insurable or uninsurable. But there's a lot on that continuum, isn't there?
There is.
Can you speak to ratings and just a little bit about, someone may have diabetes and think they're absolutely uninsurable or have had a heart replacement.
Sure.
And so can you speak to that?
Yes, these are the type of impairments we look at every day. And we actually do have a medical director on staff who helps us with these very complex situations. Yes, we insure diabetics. Lots of carriers insure diabetics. If somebody is in good control, taking their medication, they don't have any secondary complications, we are going to look at that case very favorably. But on the flip side, there could be a diabetic that maybe isn't in the best control, maybe has some other comorbidities with, heart disease, other complications, kidney disease, they may have to pay a little bit more in premium. So that's what we're looking for there. And it's really the law of large numbers. It's kind of the basis of what we do. You put 100 of these people in the room together, and how is that going to work out based on the product pricing? But we look at lots of different things. We look at our application, which has health questions and also financial questions. We look at that along with some third-party data, like an RX database check. We like to see what kinds of medication people
The prescription history.
Yes, prescription history. We look at driving records that I mentioned before. So we pull it all together and hopefully come up with a great product for your clients.
I think a lot of people understand that when you're younger, insurance is cheaper. And I often say, you buy term because you're kind of betting you're going to die, and the life insurance company's betting you're going to win, and so the prices are cheaper. And as you age, they begin to agree with you.
Right.
And the prices do go up as you age, but it's not an inflationary adjustment.
No.
And you give brownie points, so to speak, for people that are really conscientious medically, even if they have some medical condition. If they're aware of it and acknowledge it and treat it, you do that. So can you speak to, why a young person would even want insurance?
Sure. It's a great question. I have young adult children that ask me that question, so I'm prepared to answer. So you want to lock in your insurability. We talked about, how when you age, you can develop complications. So when you're young and healthy, you want to get that locked in insurability, right? It's also a great asset building, for some of our products where you can actually accumulate value in product, if you will, for other purposes. Instead of going to a bank for a loan to purchase a home or whatever, you have that cash value you can do what you want with. So it's really about locking in your insurability, kind of getting you set up for the future. And as your wealth grows and as your income grows, there's opportunities to make adjustments and buy more insurance, but it really is a great vehicle for so many young people. And also, I've seen where parents will buy insurance whole life products on their juvenile children as far as educational planning. So that's another good opportunity for young people.
Most insurance companies stop issuing term insurance at about age 80.
Correct.
And so if you don't want insurance at 80 and beyond, term might be the best solution. But if you're looking for something that, with people living much longer, even young people might look at some type of permanent insurance.
Yes.
Do you agree with that?
I do agree with that.
Okay.
I mean, there's so much
Interesting.
opportunity with the accumulation products that we have. And it definitely is, certainly term insurance, is cheaper. We have 10, 20, 30-year term products. But, there's always sometimes people buy them for different reasons. There's the protection side of things and then the accumulation. It's not unusual to have somebody purchase a term policy along with a permanent plan as well.
So when we look at term insurance, we can kind of think of it as renting. I mean, when you buy term insurance, you're renting. You have no cash value,
Right.
no equity, just like renting an apartment. But a permanent policy does give even a young person some equity
Yes.
that they can build
Yes.
longer term.
Yes.
But if you were thinking about term, one of the things some people think about are, what is my conversion privilege? In other words, if I buy a 10-year term and that 10-year is up,
Right.
and I want something longer term, you can either buy more term and rent more, or how important do you think conversion privileges are in a term product?
It's very important, and that's where one of our product portfolio, we really do shine at Penn Mutual. We have a contractual term conversion privilege that you can convert to any of our permanent plans. So it's a wonderful opportunity. Let's say somebody's health has changed, and maybe they can't afford a brand new policy, right? They can convert to that permanent plan without any medical questions. So we are really thrilled that we are able to offer that. A lot of carriers do not have that conversion policy to all their permanent plans, but we do at Penn Mutual. And you can do a partial conversion. You don't have to do a full conversion. So it's really important. And we actually heard that loud and clear from our financial professionals a few years back that, you guys should think about converting to all your permanent. We listened, we talked to our product people, and now it's contractual.
It's so great. In a recent situation, I had a young couple, and they don't have any need for permanent insurance right now, but their estate is growing. Mm-hmm. They're high earners and successful. And so they did, each of them, did $1 million of term that is convertible. Mm-hmm. When they can even convert these separate policies into a joint and survivor.
Correct.
Which is used for estate tax planning.
Yes.
So it's optionality, isn't it?
Yes.
It's really having flexible financial tools.
Absolutely.
In your toolbox.
Absolutely. And what you just mentioned about the converting to the survivorship, we actually have a newer approach to that over the last couple years, where as you said, the husband and wife with a $1 million policy and a $1 million policy, they can convert to a $2 million survivorship versus just a $1 million survivorship.
That is a lot of flexibility.
Yes. Yeah.
So something that our audience would probably be interested in is just an understanding of how the whole idea of longevity and life expectancy has been doing. We've been through COVID, yet the fastest growing population of people over 100. Mm-hmm. And how are you looking at that now? Are we going to live longer?
Great question, Deb. So if you look back on, mortality over time and cause of death and such, we have made some improvements, like from 1980 to 2010. And then the pandemic hit, right? And a lot of those improvements were basically due to smoking cessation, less people smoking, less cardiovascular and cancer deaths in that regard. But with the pandemic, that kind of brought on some additional mortality with certain carriers out there. And, that's still kind of that 65 plus population, it's still kind of stabilizing itself. But with that said, there are so many medical advances, as you said, coming along that are really helping us all. For example, now this term called precision medicine is really kind of a big buzzword, if you will, in that, even like with a colonoscopy, doctors are able to see more precisely adenomas, for example, or pulmonary nodules. Tests are just getting more really precise. And so these medical advances will really help us with, with our health and longevity, if you will. So, there's other...
So they allow us to use more preventative medicine early.
Yes.
That's just a great point.
Yes.
Thank you.
And, there's some other items with longevity that have come into play, people really taking control of their health, which is great. People being proactive with their diet and exercise. And so, all these things together, we hope to have, mortality improvements and live longer.
And I think that there's this just desire to be healthier, skinnier, live longer. And a lot of people use self-diagnostic tools. And that may be on the rise, I don't know, but people are doing a lot of self-testing. And that's got to be maybe some pluses and minuses there. Can you speak to that?
Yes, there's so much out there for us to take advantage of, and it's difficult. You want to have people that are, being monitored by medical professionals, right? And, taking appropriate treatments. One item would be, we see people that are taking all kinds of supplements, from anywhere from just a supplement over the counter to, maybe even performance-enhancing drugs, which would not be a good thing. So we do want that medical supervision. We do really want to understand, why they're doing this and really the therapy involved and the long-term outcome.
I think a lot of things that people buy over the counter, they may not realize that they're not regulated.
Correct.
They're not clear about where the material is sourced.
Yes.
And so we're all we're all inclined to buy something that's going to make us live longer and look better, but it may or may not be in our own interest.
That's correct, Deborah. Absolutely.
Yeah. Okay.
Yeah.
So if you take all this in a nutshell, I think some people had said life expectancy with COVID was lessened maybe by as much as 2 years. But on the other hand, we've got all these medical advances and preventative care. So are you looking at longevity any differently going forward now than you were, say, 5 years ago?
Well, I think there's more out there that we are seeing. If somebody's going for a scan, every few months, and very that's a little overboard, if you will. So
Okay.
we want to just again have that medical supervision, and lots of drugs and therapies are coming around that will help us in our longevity aspirations. So certainly, it's something that's very much a hot topic in the industry.
And insurability is so important, but we also want to know if there's something wrong. So testing is so much easier to access than it was before. And some people might be inclined to do over testing, but we want to be preventative. And so to your point, if you're running back for the same test over and over again, from an insurability standpoint, that might spark some questions.
Yeah, there could be some red flags there.
Could be red flags. Okay, better said. So you have been known, even though your company started in 1847, you're noted for your innovation. And in the application process, you guys innovated something called ACE.
Yes.
It's the gold standard now in the industry. Can you speak to that?
Yes. Although you hit the nail on the head there, 1847, we're not stagnant. We don't rest on our laurels. We want to be innovators. We want to move our organization forward. And so back in 2017, we started thinking about how can we bring accelerated underwriting into play. And it morphed into a whole digital experience, which we call ACE, Accelerated Client Experience. And really, I was fortunate enough to be at the company when this was being done. So I was very much involved. And it started very simple. We wanted it to be simple, owner equals insured, standard or better, up to age 65, up to $2.5 million. So we started very simple, and then it evolved. We felt more comfortable with it. We were getting good experience. So then we raised the death benefit to, I believe, $5 million, then up to $7.5 million, and now we are leading in the industry at $10 million, standard or better, up to age 65. And really,
and what that means is they fill out a digital application. They may or may not even have to have an exam.
Correct. That's absolutely correct. So you fill out a digital application, and actually lots of this can be done by the financial professional. The medical questions do need to be answered by the proposed insured. Sure. And based on our rules engine, we worked with a reinsurer. We worked with a financial professional who was very tech savvy in the application process. And we put this together, and we get some third-party data of the motor vehicle report, the MIB, a LexisNexis risk score, and a pharmaceutical database check. So based on all of that and how we've built our rules with being standard or better, preferred, it can sail right through within a matter of hours.
I think the amazing thing about that is people have a lot of anxiety when they have to provide fluids and
of course.
Blood and everything. And this takes that anxiety out of the process.
Absolutely.
It doesn't mean that they aren't going to be fully underwritten, because most of the information comes from attending physician statements anyway, and you can't alter that as the insured.
Correct.
So basically, it's a very streamlined system that doesn't create anxiety, is much faster. How would you say it's affected the speed of issuing policies?
It's just amazing, and that was the intent from the beginning, to help the financial professional and the client have a seamless process, just like purchasing anything else you can do online, right? So it has really been amazing. As I said, these can be issued approved within a matter of hours. The issue process is, an e-delivery, e-payment, and then at the end there's a client portal called Insight where you can actually monitor the performance of your product and your policy. So it's just been amazing. 90% of our applications go through the ACE submission process. And they may kick out to an underwriter based on face amount or an impairment or some other reason, but of that, 60% are fluid free, just like you said, no exam, no labs, which is really important.
6 out of 10 don't have to have an exam.
Correct.
That is really impressive. Yeah. And some of this was an outgrowth of what you experienced in COVID. right?
Well, actually, we were well positioned because we came up with our accelerated client experience 2017. So we were
Wow.
well positioned.
Oh, thank you.
It's like we had the foresight of doing something, because when the pandemic came, nobody was doing exams and labs. So it really put
Right.
us in a great position. People were thinking about their mortality, which was unfortunate, but there was more desire to buy life insurance at that time. So we were really in a great spot.
You were doing things better, faster,
Yes.
even not knowing COVID
Correct.
was
That's
going to
absolutely
come.
correct. Yes.
And your growth has been enormous, hasn't it?
It has. It has. I mean, even looking back at, when we used to have our building in Horsham, we're fully remote now, Deborah, and, just the growth and the talent of the company. And we're able to have people in all different time zones. The team has just grown. Our operations team is just, phenomenal and has grown as well.
So during a period of remote work, you've experienced incredible growth.
Yes.
And now not all of your employees are remote. Most, probably
Well, actually,
90%
a
or-
good percent are,
Yeah.
because we do have field offices where if people want to have in-person
Okay.
connections, they can. However, we are fully remote, and we embraced it. And actually, I think we represent 45 states. So again,
Interesting.
that time zone is really effective. If we have to speak to a customer, in California or Arizona, we have the staff to do that.
And all the work is behind the scenes, so it's not client facing.
Correct.
But I do know that in advanced estate planning, you do have attorneys on staff who are incredibly
Yes.
capable of being client centric as well.
Yes, we have
Right?
a fabulous advanced sales attorney, and attorneys, I should say, who are just phenomenal. They are out there, they're talking to all of you.
Yes.
They have no problem talking to a client if they have to. And we have all kinds of advanced sales designs, from business planning to estate planning, just to name a few. It's just incredible, and they're always available to help.
Yeah, the range of, I think people think in terms of products. The range of products you have are great. Can you speak to that range of products?
Sure. Yeah. The product portfolio that we have is again phenomenal, and I noticed that immediately when I started at the company 12 years ago. I mean, we have term, we have a whole life, we have index UL, we have a variable product, we have survivorship. So it really depends on what the client is looking for, and that's where your help comes in. There could be different purposes: protection, accumulation. We have lots of great riders as well. We have a chronic illness rider. We're coming out with a 4-charge chronic illness rider in September. So we're very excited. We don't rest on our laurels. Like I said, our product development area is constantly listening to all of you. What are the needs that we need to fulfill for your clients?
Innovation is a theme, and all the way from a simple term, but again, whether it is the cheapest term or not, and sometimes it is, sometimes it isn't. Insurance companies evaluate things differently, but with the term conversion privileges you guys have, the flexibility, a couple percent more doesn't mean anything when you can buy flexibility and
Correct.
optionality.
Yes.
And then in the business planning area, you offer insurance for partners where the deceased partner needs to be bought out.
Correct.
And that can be based on valuations of the company. And then for estate tax purposes,
Yes.
the joint survivor. And when you speak to whole life, indexed, and variable life, can we just talk about those briefly in terms of the difference between, let's just take the basic difference between a universal life product and a variable life product. I think that's where people kind of get confused.
Yeah, well, the variable life is really, there's certain funds and such that's being invested. So that's really the difference there.
It's the underlying investment
Correct.
in
Yes.
the insurance product.
Yes.
So with the universal life, it's really the general fund of the insurance company.
Yes.
But in a variable life, the consumer can actually pick an investment lineup.
Yes.
And
Yes.
so it's based on how the cash value is invested. Is that a fair?
That is absolutely correct.
Great.
Yes. You
And
explained
so depending upon the amount of risk and the guarantees that someone's want, you've got something across the spectrum.
Yeah,
for everyone.
we really have it all, and
Yeah.
we're not a one-trick pony, as they say. We have
Right.
a very robust portfolio.
We talked a little bit about how you evaluate insurability. But let's kind of play a rapid fire game
Okay,
on
that sounds
things
fun.
that inquiring minds want to know when
Okay.
they're thinking about insurance. Okay, I maybe was a smoker a long time ago. Maybe I'm not a smoker at all now, but how do you think about nicotine?
So nicotine, we got about 22% of the population that uses nicotine. 17% are actually cigarette smokers. So, we have to take a look at that. Certainly if someone is currently smoking, they will get tobacco rates. But, what we found is that, there's other things that have come into play, like vaping with the younger generation. We have tobacco pouches. There's cigar, there's cigarettes, all kinds of things. So
Pouches, patches, and
right,
other
patches,
tidbits.
you got it. So it's a lot there, but certainly, the population that is smoking has declined over time. But I think in the younger adults, it is picking up with that vaping, and that's problematic.
Interesting.
Yeah.
Caffeine,
Yes.
culprit or not?
I don't think we're too worried about that. Certainly caffeine, I'm one all for it, but, in used in excess, people, are using power drinks and excessive caffeine and soda. I mean, a lot of that is not good, but, someone that is, caffeine is fine. We're not too worried about that. A lot of that, if you are using it excessively, it can impact your blood pressure, you can get palpitations, so you just have to be mindful of that. But from an underwriting standpoint, it's all good.
It's hard to know where the line is for someone who's not evaluating it from an insurance perspective. But what would be excessive in terms of power drinks and those sorts of things?
Well, if you're feeling palpitations and you're feeling jittery and all of that, then it's time to take a look at your habits and
Time
maybe,
to evaluate
yes.
life habits in
Yes.
general.
Yeah.
Okay. Weight loss drugs.
Okay, weight loss drugs, yes, in the news every day, I think. So the GLP-1 drugs, such as Ozempic, historically used to control diabetes. Well, now it's used as a weight loss drug, which has been great, right? And we've learned that, people that are on the drug and, sustain and have long therapy on it, it's great. They're losing weight. They're having benefits of, better blood pressure, better hemoglobin A1C, better lipids. So there's a lot of benefit to it. However, you really do need to maintain that drug, or else you can easily gain the weight back. So that's something that we do look at, how long somebody's been on that drug. And what we're finding too is there's been other benefits to that GLP-1 drugs, for example. People are finding that they've maybe had other type of chronic conditions that they're benefiting from, whether it's menopausal symptoms or irritable bowel. This drug seems to be helping in so many different ways.
Interesting. And even in mental health.
Yes, exactly. So, we're still very early on with this drug,
Yes.
early era of the GLP-1s, but it looks to have a good benefit mortality-wise if you continue to be on the drug.
But if you've lost 100 pounds, it's not easy for the insurer to assume that you're always going to be 100 pounds lighter.
That's correct. So really our philosophy on intentional weight loss would be, we look at it like within the last 12 months. And then let's say someone has lost 100 pounds. Well, the likelihood if they go off a drug or they go off their diet, that they might gain some of that back. So we add half back to that weight.
Okay.
So, but if it's been, 2, 3, 4 years down the road and you're sustaining, then that's fine. We would take full credit for that weight loss.
Mm-hmm. Some people wonder about suicide and suicide clauses in policies.
Yeah.
Obviously, it would not be a benefit to anyone if someone buys a policy with the intention of
Correct.
suicide.
Yeah.
But how do you guys look at that?
Well, that we have, it's a 2-year contestability clause
Okay.
for sure. And, we really do evaluate mental health quite, we see a lot of it, honestly. And, people that are taking medications for anxiety or mild depression, we don't get too worried about. But if people have had suicidal ideation, if we learn that from the medical records, or if there has been attempts, then that is very serious, and we would probably, hold off on that insured at this point in time. But, it's unfortunate.
Yeah, and there's a big difference between someone who's gone through a very stressful event in their life and might be, have a mental health problem for a while versus long-term depression.
Right,
and
exactly. If
big
it's more of a
difference.
situational type of scenario, we're not going to get too worried about that. But if it is a chronic illness, there could be other things going on. We looked at, do people have a good support system? Are they taking their medications regularly? Do
Okay.
they, are they going to their job and functioning out there in the world well? And so those are all the things we look at when we're evaluating somebody with that type of risk.
Okay, and something that's legal in some states and not legal in others. How about cannabis?
Cannabis, that's another great question that I'm asked about all the time. So, the way we look at it is, if someone is using cannabis infrequently, whether they're inhaling it or edibles, again, we're not going to be too concerned regardless of the legality of the state. It's really about the frequency and the type and the delivery system. If somebody is vaping and smoking marijuana, they will be charged tobacco rates.
Sure.
However, certainly if it's a chronic user, heavy user, perhaps they're going to end up in the emergency room with, there is a syndrome if you use it excessively, that's a different story, and they could actually be, rateable for that. But overall, I think, and there's also the medical marijuana side of things too, but if it's used recreationally, infrequently, it's really not too much of an issue.
On the recreational side, some people view it as a gateway drug, something that might go to worse drugs. And certainly if someone has a history of many other drugs, they might have either an uninsurable or a rating potential
Correct.
Assigned to them.
Yeah, and that's where we look at, are there other addictions? Is there polysubstance abuse? Is there heavy alcohol use as well? So those are the other things that come into play that we look at.
And cigar smoking. This one is always interesting to me.
Cigars, we always hear about that occasional cigar smoker, right, on the golf course. But if someone's playing golf every day, that's a little bit more than occasional, or when they're hunting and such. So, yeah, occasional cigar smokers, I think we go up to, maybe, once a month, what have you. We're not going to be too worried about it. Very occasionally we're not going to bat an eye. And so, but, again, if people are smoking it, they're going to get tobacco rates.
Okay.
Yeah.
We talked about this a little bit earlier, but with the advances in testing and the accessibility to that, when does one cross the line? I mean, it's hard. I realize that there's no red light, green light here, but when does one cross the line on a lot of self-testing?
Yes, it's really, you've got to wonder what's really going on. So, if it's excessive, if we keep seeing numerous doctor visits and requests for tests, and it's just really they are probably crossing the line, but on the other hand,
maybe for good reason.
Yes.
And then they solve their problem.
Right. Yes. I mean, it's just one of those red flags that we take into account, because it's hard because there is so much that's available to people today, not how it was 20 years ago. So, we like people being engaged with their health. We want people to be proactive, but again, it can go to the extreme where it's probably not very healthy.
Sure.
Yeah.
And it's hard sometimes to diagnose what problems are, but if you diagnose it and get on track, the insurance company is going to give you points for that too.
Correct. Yes.
Okay.
I mean, certainly
Right.
if there's a diagnosis, yes.
And we did talk a little bit about supplements, but if people are using a lot of supplements over the counter, they really ought to be thinking about that a little bit.
Yes.
And the sourcing of those.
Correct. And you really get into, the other types of supplements, hormonal and, where you're having injections and things like that. It really is, you've really got to look at what is really the medical outcome here. What are they trying to accomplish? Is there medical supervision? Because some of those can be, risky.
Mm-hmm.
Yeah.
I'm going to switch gears now to just a little bit more on a personal level.
Sure.
You are a chief underwriting expert at a major company. And I would imagine the number of chief underwriters who are women in the insurance industry is not an incredible number. Is that a fair statement? I mean,
it's I never really took note of it, Deborah, to be honest with you, but I have very many friends out there, colleagues that are chief underwriters, and I can name, on one hand, how many are women? Probably more men, like you say. Yes.
Yeah, it's been male dominated.
Yes.
And so you've really risen to a point where there are a few women operating at your level. And so a lot of our listeners would love to know, what do you think are some attributes that have helped you rise to this level in your industry?
Sure. I would say, being a continuous learner, getting to have every opportunity that you can possibly have is really, just really inserting yourself in situations. Speak up, right? Mm-hmm. And don't be complacent. Certainly it's difficult at times and challenging, but, being that continuous learner, upping your game, in all different avenues of the industry. We have people now that are so much interested in AI and how can that help improve. So, we have a great educational series with the Academy of Life Underwriter, Home Office Underwriting Association. So there's lots of education, and the more we know, the better we become. We become, innovators, creators, and can really help you with the needs for your clients. So I would say really just taking advantage of every opportunity out there. And I had a friend say to me, anytime you can get in front of the field and talk with distribution, it's such an opportunity, talking face to face. And like we are doing right now, it just such a great, deepens the relationships, and that's really important.
I don't think there's any evidence on this, but someone really wise, a mentor, once said to me, the only thing that he found that was reversing aging for him was continuous learning.
Yes.
And, again, I know there are probably no underwriting stats on that.
Right, but I agree with that.
Great. Mm-hmm. As we think about advice, maybe you've had mentors along the way, and you think about advice that you've been given, can you give us an example of maybe the best advice, or even, as importantly, the worst advice you ever received?
Yeah, well, it's interesting that you use the word mentor because, everybody wants a great mentor over time, but I read something where mentors are okay. They give you good advice, a little bit of a development, but you want a champion, right? You want someone that's a champion for you and somebody that really recognizes your skill sets and will be an advocate for you in any situation. So I would say, find your champion out there and really, just rise to the occasion and take any opportunity you can. And, you need that person that really recognizes you and behind the scenes will do whatever they can to help you in your career.
That is so great. Mm-hmm. I listened to someone one time say, you want someone who's pounding the table when you're not in the room.
Absolutely.
For you.
Absolutely, yes.
And that's not easy to find.
Right.
But I think that we all, I think this idea of just putting people together in mentoring may not be as effective as when you find the mentor yourself that really helps you.
And as I look back in my career, back at a company, Security Connecticut in Avon, Connecticut, I had someone there. I mean, she really brought me out of my shell. I remember having my first presentation in a room full of, financial professionals, and I was really nervous and scared, but she had confidence in me. And, you really just need someone like that, like you can do it. So I just always will remember that.
To throw you out there.
Yes, exactly.
Even before you might think that you're ready.
Yes.
That's a great point.
Yes.
Thanks.
Mm-hmm.
And what about, is there any advice that you thought you were ill-advised? Or bad advice?
Yeah, on that one, I had to phone a few friends on that one, Deborah, getting the worst advice. There was one that said, fake it till you make it. And again, I think that's not good advice because, you really just need to be knowledgeable about everything. You don't fake anything in our industry, right? You want to be able to, have the skill sets and the technical skill sets and the people skill sets and relationships. You want all that. You don't want to fake it till you make it. I just think that's a strange, piece of advice someone would give another person.
I wonder if you could share with our audience your favorite book.
I will. Actually, I just started it. It's called Unreasonable Hospitality by Will Guidara. and it's a book about his experience being in the hospitality industry, specifically at 11 Madison Park, which is a wonderful restaurant in New York City, which he basically turned around. And it's all about what we all need to do to go above and beyond the customer's expectations. And so it's, resonates very much so with me, with our business priority of top-tier service at Penn Mutual. So it can resonate in any industry, and it's just all about what we need to do to serve our customers and even better.
Anything to do to curate the client experience I find valuable, so that's great. I read an interesting statistic, by the way, that if you gauge jobs on the amount of stress, the restaurant industry is the toughest, particularly for a waiter or waitress, because they have to remember more in 60 seconds than any other occupation. So
Right.
that's how they gauge stress.
Right.
But I think it's really interesting that it would come out of that industry, because I think they have a lot to teach all of us
Yes.
about the client experience.
Yes, and one of the foundations, as I'm starting this book, is he wanted to make sure the waiters, the waitresses, those that work in the restaurant have that cohesiveness and understand the goals along with the actual people coming to the restaurant. So it's a whole transformation of
A
that.
holistic client experience.
Yes.
Well, I love the example, because I think we're all looking for a great and very holistic client experience, and I think that adapts very well.
Yes.
So thank you so much for coming. We enjoyed everything that you shared with us today.
Well, thank you so much for the opportunity. My pleasure, Deborah.